All right. Hey there. Good afternoon, everybody. Chris Franks with Texas West Capital coming at y'all live here just after 11 a.m. Central Standard Time here on what is today? Friday, the 9th of May, 2025. Hopefully, y'all are doing all right. Man, oh man, before we get going here, hit the thumbs up, hit the like, follow. Do me a favor, share the link, guys. It doesn't take more than 2 seconds for you to do that, and I'd be really grateful if you did. I struggle with social media. I struggle with marketing, and so any little bit that you can do to help me out would be absolutely fantastic. Fibbo is not here today. I know we said he was going to be, and he had planned to be. Unfortunately, he sent me a message that he's really, really sick today, not feeling well. So it looks like we're going to reschedule him for next Friday. So I said, well, I didn't have anything else planned, so why don't we just do some chart requests today? Of course, we're going to go over Bitcoin. We're going to go over Ethereum as well. Ethereum finally making a move up. Let's see, Bitcoin's up something like 40% since April 7th. And I believe Ethereum's up 40% since yesterday's low. So, a lot of good opportunity here. Every day, every evening, Monday through Friday, I do a market wrap for our members over at TWC. And I usually, like I said, I usually do about 20, sometimes 25 charts, stocks, crypto, future, stuff like that. If you got in anything that I put into the crypto one the last couple of days, really, you should be up really well today. If you watch Scott's show on Wednesday, I gave you guys some charts there with some upside potential coming in, and those are looking really good today as well. Matter of fact, I think I'll take a look at sand here as well today. So, yeah. So how are y'all doing? Y'all dealing with this okay? It wasn't too long ago. It was just a few weeks ago where, we were at 74,000 and, everybody was trying to convince you that was it. That was the end of it, right? That the top was in, we're going down. Even now, you still have people now still trying to convince you that the top is in. I don't think it is. I don't, again, we did nothing on the macro side of things as far as the chart goes to indicate that the top is in. We didn't do anything there. And so, there was no reason to be bearish. We found support at the weekly. You know what? I'll just bring it up here, guys. I'm going to start show you here with it. I'm just like stumbling with words the last few days. You guys will have to forgive me. It's been a tough last few days with me and words. But yeah. So here we go. Again, right here, if we jump out to the weekly, there's two things I've been talking to you about. One is the yearly pivot, which held this support. The other was this, all during this current cycle here, every time we had the lengthy kind of sideways, right? It's pulled back to this 43 kind of area here on RSI. And so we did it again, here, we did it here, did it here. So, you got two things going on. The third thing being that we basically had a retest of previous all-time high resistance as support. So, the fact that people were really bearish right here where support was, no matter how you're looking at it here, really should have you kind of questioning, listening to what those people are saying. I'm not saying that they're bad people or whatever. I'm just saying that, there's a certain bit of experience that comes with experience, when you've been doing this for 30 years across multiple markets. And so, this is why I was never freaking out. This is why I was telling you guys, listen, if it does go, we could potentially look at here, but we've got all this support here. We're still holding. As long as we are, there's no reason to think that we're going lower. There's no reason to think that the top was in. Okay. And so this isn't a, oh, I told you so kind of thing. This is just a, listen, you guys are inundated with a ton of information out there. You've got a lot of people who are on there who are good at marketing. I'm not. In case you haven't been able to tell, I'm not very good at marketing. But they are really good at marketing, just not so good on the, the technical analysis part. And so The problem with that for you, especially if you really don't know what you're doing, if you don't have a lot of, time and experience in the markets, going through multiple cycles, different asset classes, stuff like that, is that it's easy to follow up with them and go, oh yeah. They're what they're saying makes a lot of sense. When it doesn't really, at least not till you get some sort of real confirming move, But here's the other problem. A lot of times new traders come in and they're looking for, they want to know that the top of the cycle is in on the daily chart. You will never, there is no way to know that the cycle top is in on a daily chart. It's just not going to do it. By structure, you're not going to do it, guys. Right? Because we're talking about a cycle, which is multiple years. A day is a very, very, very small time frame. If you're thinking about a 4-year cycle, you're thinking what, 365 days times 4? Right? You're talking about almost 15,000 days, and you want to find one day that's going to tell you that it's the top of the cycle. That makes absolutely no sense, does it? But we don't think about that when we first come in as traders, right? When we first come into markets, when we're investors, we don't think about that. We just want to know as soon as possible because we're scared of losing money, period. That's the big issue. But you've got to get comfortable with the fact that you're going to lose money from time to time as a trader. And the newer you are, the more money you're going to lose and the more often you're going to lose it, which is why risk management is so freaking important. I still don't see a lot of people talking, extensively about proper risk management and its importance. Listen, guys, the fact is, if you're in the market, right, the market is a game of losing. And he who loses best wins. Okay. What do we mean? That means that when you come in, you don't control where price is going. All you control is where you exit, where you enter, where you exit. And exiting is the most important because, one, if you're correct, your exit is going to maximize those profits, right? Two, if your idea of what you're doing is incorrect, your exit needs to minimize those losses as much as possible. So two things. One, you're in a game of losing. So because of that, because the absolute only thing you have control over is where you exit, right? Where you're getting out of price, right? You don't control where price is going. So because of that, you should be focusing on, more than anything else, proper risk management. But it's not sexy, right? It's not flashy. And so most people don't do it. They get bored. They want to lock in a 100x or a 1000x, and they want to do it overnight or, begrudgingly in a week or a month, right? But that's silly. That's absolutely ludicrous for you to think that way. Oh, but so-and-so said they did it. Yeah, okay. So maybe one person got lucky. People don't, you don't have experience to get, 100x or 1000x on a move, guys. That just doesn't happen. Okay? Because there's too many other things going on out there. And if you understand what you're doing, you recognize that there's too many other moving parts to be able to call it. And you're okay taking 100x if you get it, but the odds are you aren't going to get it. And you sure as hell aren't going to say you did because you were using some kind of intelligence. If you get 100x, and get it quickly through some kind of shitcoin, you did it because you got lucky. You tossed in a few bucks into some micro cap and prayed. You probably lost money. You probably did it like multiples and lost money on all the other ones, right? And you just happened to get lucky that one time. But again, when you come in new to the markets, there's people out there like that are telling you what you want to hear. And that's just going to get you to lose money. Okay? That's going to get you to lose money. And the last thing you want to do is lose money that you don't have to when you're in the markets. Yes, you're going to have to lose money from time to time. There's no two ways about it. I've been doing this almost 31 years here. And, I trade live with our guys 3 days a week, Mondays, Tuesdays, and Thursday mornings. We usually do pretty well. We're well up over the last 2 months, but sometimes, just can't get it going. Sometimes I get a loss. It happens. But and I'm okay with that because I'm here to, the people that are at TWC, I want them to understand what the reality of trading is, because if they understand it, then they're going to focus on that risk management, which is where they need to focus, right? Which is what you should be doing. Even if you're not a TWC, you should be focusing on your risk management more than anything else. Some new technique or some new system or some new style is not going to make you more in relation to how much you can limit your losses with proper risk management. You understand what I'm saying? Let me see here. So, again, this is a beautiful chart. You guys, I mean, you look at this. Is this not a beautiful chart? We've got clear levels along the way here. I mean, unlike previous cycles where we've had just a lot of straight up, right? Which is what you think you want until you get in it. And then you get scared on every little pullback, right? These give you time to reflect, right? Now, if you're silly, you're going to listen to other people talking about, and they've done this the same people, this entire cycle. They've said, this is the top, 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 and this is going to get rejected here and fall lower. I mean, the same people have told you this consistently throughout this cycle, and they've been consistently wrong. And none of them will step up here and say, no, okay, yeah, I've been wrong. Not one of them will do that. So, again, if you're following people who are constantly, being wrong in that way, I mean, you've got to kind of ask yourself, what the hell am I doing? Why am I still following this person? Okay. Because again, at the end of the day, the goal is to make money. If you're in the market, the goal is to make money, right? And if you're doing things that don't make money and you're doing them consistently, it's that old adage, doing the same thing over and over again and expecting different results is the definition of crazy, right? Does that make sense? But it's hard. It's difficult. I'm not going to say it's easy. It's difficult. Okay. Trading is simple. It's not easy. It's not easy because you have to deal with all these emotions you have. And these emotions are amplified. They're exponential when you don't know what you're doing. But how many of y'all get into the market and you go, oh, I don't know what I'm doing. I need to learn. Most people don't. They get in, they think like I did when I first got in, 30 years ago, which was, oh man, I can make a ton of money. Right? That's what we all think when we first came in. Oh my God, it's going to be so easy to make money. And then you find out it's not. Right? So here we are. Anyway, again, there was no reason at this point here to think this was the top here. Absolutely nothing here. We just retested previous all-time high resistance as support. We had the yearly pivot. RSI on the weekly was pulling back to the same exact area it pulled back every lengthy sideways we'd had in the cycle. I mean, and down here, obviously, stochastic RSI was oversold at the time. You can then see here on the week of, I think this is August 7th, April 7th. I keep saying August. But this April 7th week here, you can see that you got a bullish engulfing candle on greater volume than what you had the candle that's engulfing, which is what you look for. We swept this low right here, so bullish SFP. On top of that, if you understand Wyckoff, we've got a range here. You had your selling climax, your automatic rally, your secondary test. It came down here. There's your spring. Boom, boom, boom. This is what we call a jump across the creek. The creek is the resistance here, the supply. So this is our jump across the creek. And we didn't even pull back for a back up the edge of the creek. We kind of did a little weekly kind of pullback right here. And it's just right in this, again, something else I teach is to always look left. You can see so much information if you look left. But this doji right here, look where it's at. The other dojis, the candle spreads here, this whole candle right here. I mean, we just did, and boom, popped out higher here. Where are we at now? We're at this weekly resistance right now. From back here on the week of January 20th, and then the week after that, January 27th. I mean, holy crap, right? It doesn't make a whole lot of sense down here. When you look at it now, I'm sure you can look at this now and go, okay, yeah, you're right. It doesn't make a lot of sense now, but you're caught in the moment here with the emotions, and that's where it becomes difficult. Now, locally, what's going on here? Again, we got nice movement here. We're above the monthly R1 pivot here. We're just kind of hovering right above it. Let's zoom in a bit more here. We do have room here on the stochastic RSI on the daily to continue up higher, and we're just overbought here on the daily. The last time we were overbought at this level was back over here around November or so, when we were kind of topping out in this area. So, you know, the RSI is pretty high there. Let's jump into the 4 hour. 4 hour, we're already getting a dive down here and coming down, you know, near neutral and stochastic RSI, and we're just kind of doing sideways here. Now, if we're looking at this, if you're looking at this, you can count this, right? You can count 1, 2, looks like 3, and a 4 is a triangle is what it looks like we're doing here. Now, here's the one thing you guys need to learn. Use freaking pivots. I'm telling you guys, it is one of the easiest things you can do, no matter how advanced you are as a trader or how inexperienced you are as a trader. Is one of the best things you can do. There are some things that I teach from time to time about pivots. One of these things is, okay, so you saw we had this breakout here, and you see how we started moving aggressively? That usually indicates that we're going up the R4 or R5 pivot. We're going to run the resistance pivots. It's the same thing when you do it to the downside and you get some aggressive movement through the S1 pivot. Usually you're going to run it through the support pivots there. But right here we are. So let's zoom in into the 1 hour. Let me see here. So it's potentially, we've got this ABC here, ABC up, ABC down, ABC up, maybe ABC down. Let me see, where's the low? 461.05, 454. Yeah, so here, if I'm looking at here, my first thought is B, C, D, E right now. Now, it doesn't have to end that way. What we need is a breakout above wave D here at, this is the all-time index chart here for Bitcoin. But on this chart, it's 103.770 and 7 cents. If we can get that, that's going to suggest the low is in. If we break out above wave B here at 104.258 and 13 cents, adds confidence to the count. Based on the highest point of this overall pattern here, that gives you a pattern target of 105.441. Wave 5 on that. So right now, this is currently, I'm looking at this is currently how I told our students that I'm watching it right now. Now, it's also possible that wave E could be like A, B, C, D. It can create a triangle of its own as well. But ultimately, at this point, what we're looking for is a breakout above wave D there at 103.770 and 7 cents on this chart. And if you can get that, most likely this thing's going to break out higher and head up there. Now, does it have to hit 105.440, 105? No. It's just it's a price action way of finding a target, which is basically you just measure the height of the pullback at its widest point, right? Its highest point in that, and then you look at the 1618. But you're not going to use your, normally we're doing our fib extensions here, right? But instead you're going to use your fib retracement tool, and you're just going to go in here and you're going to mark your 1618. And that way you can measure out this. And what that tells it is 61.8% added to the top, of the overall, the highest point of the pullback. If you take 61.8% of that and add it to that full pullback there, that's where it's giving you the target. Okay. Now, if you're doing Elliott wave, another way you can do this is you could jump in here with something like this. So you measure out wave 1, and you put it there, wave 4. And in this case, you look for 100%. It says 107,219 and a half. So I would also keep that as a possibility as well on this. So I'd first look around 105,441 or so, and then I'd look up there around 107,282, which, by the way, puts you just shy of this all-time high up here. I think it's right around 109,000, right? Yeah, 109,346 on this chart. Now, what else do we know? We know that usually when you're doing Elliott wave, right? When you have a correction, most often you're going to get 5 waves up around the swing high. Sometimes a little bit before, sometimes a little after. And that'll give you a wave 1 up, wave 2 pullback, 3 waves, usually check around 50% of the pullback. And then boom, you get your 3. So there's still a lot of upside potentially left in here. As I look at this, it's possible this is a 1, 2, 3, 4, and we're working on finishing the 5 here, which would make a lot of sense because, again, where we are on the daily in terms of the indicators here, the oscillators here, right? Does any of that, or does all of that make sense, guys? You guys are killing me. Listen, guys, you got to get in at the beginning of these shows if you're not going to watch the, the social media, because otherwise we have to tell you every 5 minutes, every time somebody new comes in and says, "Where's Fibble?" We got to tell you, well, he's out sick today. And that's why we're doing the chart request today. So, oh man, you guys are killing me. I think he's trying to hang around in the comments a little bit, but he's not feeling good at all. So, I don't even know if he's really hanging out a whole lot in there. Let me see here. Oh, I see Costas is saying Fibble has a hangover from all the winning. Fibble wanted to talk today about the gold trades that he's had here recently over in our at TWC, which have done extremely well. On one contract, I think it was something like $12 to $14,000 or something like that, and that was just recent on the move. So, yeah, put a banner up at the bottom saying "No Fibbo," and that's not a lie. I probably could do that, huh? So anyway, yeah. So again, Bitcoin looking good here, right? Let's jump on to Ethereum, guys. Look at Ethereum. So Ethereum, something everybody's been, crying about. Sentiment's been like really poor. I've talked about this so many times, and how usually, yeah, he's sick of winning. And so, I've been talking, especially here, in this area here about how sentiment has been so just absolutely trash, right? For Ethereum. And usually when you're getting to that point, right, we're not talking about just your feed on social media because your feeds are curated for you by the algos, but we're talking about legitimate sentiment, right? And when it's trash bottom like it was, we talk about, well, that's usually kind of where you're making that bottom area. And so what we had some movement, some sideways, a little bit more movement, some sideways, and then boom, shakalaka, 37.5% since yesterday's low. Almost 40% on that. Now, let me zoom out here and then I'll zoom back in. Right now, it looks to me like we've got maybe an ABC, and then A. Oh, we're finishing this here as a 4, as a flat correction for 4. And then we'd get an ABC up. Okay, this looks to me like a diagonal, a leading diagonal, a wedge, or maybe even an ending diagonal from here. Nonetheless, looks like a diagonal based on the height of this wave 4 pullback. So again, like I just showed you on the other one, do the same thing here, right? And that gets you this pattern target up here of around $7,885. So that's kind of big picture. That's kind of where I'm looking for it to potentially go, right? We can look here. It is. What do you want to look for? Well, as prices continuing up, you want to see a weekly candle impulsively break out and close above the yearly pivot here at $3,100.01. You want to see that. If you can get that, you should be looking to new all-time highs at that point. Okay. If we're looking at where we found support here, really, I mean, it's just this same area, right? We found resistance and then support over here in 21. We dropped right through it here, found resistance in that same area right here in June of 22 at the bear market low for it. Popped out, found support on it. Again, found resistance at it, found support right here, found support a little bit higher up. But you see how this area where we came from is in this major resistance support area here, right here at the low volume node. I talk all about volume so much in so many different ways in the academy, guys. But we got a low volume node there. And then what do we do? On the week we printed this doji, right? Doji on excessive volume. Volume spike at the low of the decline. Doji printing. You should at least expect a bounce, if not a reversal. Coming off the top here, we have bearish market structure here. We have a high, low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low, right? So what do we need to do to break this bearish market structure? We have to break out above this last lower high. We're doing that. Now, what I usually would like to see, what I usually look for after that, because they could just break out there and then continue lower, and then you have a high, a low, a lower high, and you get a lower low, right? But usually, if you get the breakout, and then you get a pullback, and then you break out above your breakout, that's as close to a guarantee as you can get that the low is most likely in. And so that's what we're looking at here, right? Do we get the breakout, which we have here, looking for a pullback and then a breakout above that, okay? Where are we on the daily here? So it looks to me like we've got a 1-2 and then a 1-2 here. Because if we go and measure this out, you can see that we're barely to the 100%. So that's not going to be a wave 3. If wave 3, we're going to look at the 1618. So this looks like, again, a 1-2, 1-2 here. Now, locally here, it looks like we have a 1-2 and then another 1-2. So I'm thinking what we have here is this 1, 2, 3. We're looking for a full on the pullback here, 4 to give us that 5. And then that'll be a 1 and a 2 and a 3, 4 down here, and 5 finishing up there at 29.74. So that's how I'm looking at, let me get this off here. That's how I'm looking at this kind of playing out at the moment here. So we have a 1-2 here. If we can get this pullback down to around 21.92, that's our initial, always fourth wave initial pullback is 38.2. 50% secondary target. So I would look there at 21.92, potentially down to 21.08. Now, pulling down 21.08, as you can see here, once today's candle closes, may give us a very large fair value gap here on the daily. But what I'm looking for here is, can we get a rally back off the 21.92? If we do, that gives us a pattern target up here of 26.88. And that again becomes your 1, 2, 3 here. So your 3 of 3. And then we'll need a pullback down here to around 27.87 or so. And then that will give us a pattern target up here at 29.7450. So we've got some things that have to happen, and price can go lower. If this goes to the 50% here at 21.08, this target is going to be up higher because you're going to have a deeper pullback. So, again, remember we talked about when you're getting your pattern target off the pullback, it's the 61.8% of that pullback added to the overall height of the pullback. So the further you pull back, the greater 61.8 is, which means the higher you're going to go, right? So this is kind of what I'm looking at the moment here. We'll see if it plays out, but that's what I'm looking at. Here's the 4 hour, 1 hour. The 1 hour is reset down here and oversold. We've currently got 3 here. So we could potentially do an ABC as a W, then an X, and then an ABC down as a Y. Or we could do 1, 2, 3, 4, maybe get 5 here, and then ABC, and then 5 back down. But nonetheless, looking for that move down there. You can see where I've got that. It's kind of this overlapping price action as well. So that's a good sign. So we'll see if we can get that. But as far as Ethereum goes, that's what I'm kind of thinking that we're looking at here. Okay. Let me see here. You can also note that we did have, I don't really like this breakout a whole lot, but it is here off this local, this Y right here, and you had the big candle with the big volume, which indicates usually that that's, if you're getting a breakout, guys, this is what you want to see. Let me zoom in a little bit for you here. When I say impulsive breakout and close, this is what I'm talking about. I'm talking about big candle spread, spike of volume over where you're at locally, through, and then a close there above that resistance. So whether it's a pivot or it's a descending resistance, when I say a breakout and close above it, this is the kind of idea I'm looking at. And if you can get that, then that usually indicates that your resistance that you're breaking out through, right, is most likely legitimate. If you're just getting a small little leak out over it, it can still go up higher, but most of the time that's going to indicate that it's probably going to fall back down below that line. And the way I feel about resistance lines is they need to hold. If you put a line, a resistance on there, whether it's horizontal or diagonal, and it doesn't hold this, it doesn't break out and then hold this support, I just get rid of it, right? I look for things that are consistent when I'm trying to trade. Does that make sense? I look for consistency. If you're the type of person out there who says, well, you know, you don't really have rules. You say, well, I'm looking for this, and then it does it, and you're like, okay, great, so that's great. But then it does it again this next time, and it doesn't do it, but you're like, oh, but I'm going to go ahead and say that it's okay. What you're doing is you're muddying up it, right? You're mucking it up. You're establishing gray areas in your trading. You are going to fail as a trader if you have gray areas in your trading. Have definitive rules and make sure that you trade according to them. If you have a 5-rule set for an entry, right? Price has to do these 5 things. These 5 things have to happen. And if they do all 5, then I'll enter. If that is your rule set, then you do not enter unless all 5 boxes check. This is where traders often, especially newer traders, often lose a lot of money, is because they don't stick to what they're doing. They create gray areas. They muck around, right? Because they're so scared of missing the boat, right? They're so scared of missing out on the FOMO, or they're so scared of losing money. And what happens is, inadvertently, by mucking around and creating gray areas in your rules, you end up losing money, what you're trying not to do. Losing money that you don't have to lose, right? But here's the thing. If you're using proper risk management, you don't get stressed out about losing money, because you're losing such an insignificant sum. The flip side of that is you're not going to get rich overnight. And that's where the real emotional issue comes for traders. They want to get rich tomorrow, today even, right? Tell me y'all haven't felt that way so many times before. I know I did. All at first I did. But trading, if nobody's told you yet, trading is not a sprint. It is a marathon, absolutely. And anybody that tells you anything different is a liar. You don't have to just believe me. Ask anybody that's been doing this for 20 years or more. Ask them. And they will tell you, if they've been able to stay in this thing for 20 years or more, they're going to tell you it's the long game. It's always the long game. We screw ourselves. We screw ourselves by trying to make it a sprint, by trying to get rich overnight. So our losses are not necessarily due to crypto whales and Wall Street. It's due to us. It's due to us and the decisions we make. Does that make sense? Please tell me that makes sense. This is your come to Jesus meeting, guys and gals. Everybody joining in here. Seriously. Because these things I'm talking about right now blow everything else out about strategy and everything else out of the water. Okay? It really does. If you're going to be in the markets, don't try to get rich overnight. If you do, just understand you're most likely going to lose just about everything you have, if not everything you have, and pretty quickly, because you'll constantly be chasing, making the bad decisions, all right? So anyway, Ethereum, looking like it wants to finally move up. So I like that. We'll see if we can get that continuing going there. again, if I look at this here on the daily, this does look like this 3 here, but zooming in lower, the 3 could be this move right here. And we get, a 1, 2, and then this parentheses 3 would be up here. But nonetheless, we're looking for moves up here toward 26.88 and then 29.74.50. That yearly pivot there at 3,110 cents. If you can get a weekly candle impulsive breakout and close above that, you should be good to go. Low should be in, should be looking at new all-time highs. All right. Real quick here, I want to talk about sand before I get on the chart requests. There's sand. I talked about this on Wednesday. Where were we at? We were low on Wednesday. We were down here somewhere. So this I did this on Scott's show early Wednesday morning. So I'm hoping some people caught in on that. But even here, it looks like 1, 2, looks like 3, 4. We'll get a 5 here. Ultimately, 1 and 2 gives us a minimum expected wave 3 target at 50.5 cents. So sand not looking bad at all as well. I always get that wrong. We got kind of like this going on the bottom here. I mean, I don't hate sand at all. Looks pretty good. We got a nice break through this kind of support resistance level right here. Support, resistance through that. I mean, this thing looks like it wants to run up through this low volume node stuff right here. And the pushes through this low volume node and this low volume node should be larger candles moving in succession like that, like this here. Because there's just a lack of interest by the market in these areas. That's why there's little volume there. But anyway, you should be looking up there around 50.5 cents on that one. Let me see here. Let me catch up to the first guys here asking for charts. Look at CRV. Oh, this is the wrong one here. Let me get a different one here so I don't mess that up. Is that CRV USDT? If it's a stock that you guys want me to look at, make sure you let me know it's a stock so I don't assume it's a crypto. All right. All right, what are we doing here? CRV. Let's see, we broke out right here at that resistance, hit the R1, pulled right back to it. Should be a 1 and a 2 there. So right now we're about the 123.6. So this could be an ABC. We need this to get up here around 0.9853 to give us, basically a third wave up. Locally here, again, it looks kind of like what we're looking at. 1, 2, 3, 4. Again, I think we push up higher here, maybe toward 86.5 cents next. And let me see, based on this pullback. Yeah, 84, 86 cents right now is about where it looks like we'd be headed. Not beheaded, where we will be headed. That would be my local kind of area there. It makes a lot of sense. It's right there prior to that low volume node in that area. This is possible. Let me see here. Yeah, I'm thinking it's possible we may be looking at a 1, 2 here. And then 1, 2, 3 triangles of 4. 1, 2, 3, 4. 1, 2, 3, 4, 5 here. Getting up. So I think we may be looking at something, like this. Just a 1 and a 2 back down here. And all that means is that we will overextend this wave 3 here. So if we can get this last higher move up here and then get a pullback to the pivot here, which takes us right above that low volume node, that would definitely overextend. This has 3 up here at $2.66. 5 around $3.74, which would be this wave 3 here. If we get that. It's a little early to tell if that's how it's going to play out. But potentially this may be what we're seeing here. Right now, I would look for possibly a breakout higher toward that 86-cent area, 84-cent area. And then look for a pullback down here toward, the pivot at about 61 cents. And if we can get that, then that starts really kind of opening up this potential idea here on CRV. Let me see here. What else we got here? Pepe. I don't think I have that one in here. You know what? Let me look over here. Pepe, little frog coin, did a little pop earlier, didn't it? A little bounce the other day. Yeah, look at that. Little bounce. What do I have on this chart? This is an old chart. So we're hitting just, what is that, the resistance, the support coming in that I was looking at? Okay. Of the channel. What was that basing that on? Oh, I think I was based on this low right here. So let's kind of bring this down a bit then. Okay, there we go. Now we got it down here on wave 2. I don't really care a whole lot about that. But what do I have this as here? So we had 5 waves up. Didn't really have a big pullback here though. Not even quite 38.2. Okay. I see what probably happened here. This is probably a flat here. So we went up with the 1 there, and then A, B, and then 1, 2, 3, 4, 5. Broke down that 5th wave there. Okay. Yeah, 1, 2, 3, 4, 5. We broke out above wave 4. That means wave 5 can't subdivide anymore. So this here's the weekly. Again, looks like here, if we're looking at this, be a 1, 2, and then 1, 2, 3 heading up here. So let's see where this takes us. So we'd have 5 up. That daily pivot's old. That's there no more. We'd have here 1, 2, 3, 4, 5. Potentially up there around 21,818. That would pull us back down below that. I don't like that. This might get us just 5 up to the pivot and then a pullback. So we might be working at 1, 2, 3, 4, and 5. That would be my first thought, would be a rejection here at this pivot. That didn't help me any, did it? Right there around 1645 or so. There's a little green, what used to be a demand structure now is going to work as a supply structure just above us there. So the idea would be maybe we've got, ABC 1, 2, ABC 3, we'll get a 4, and ABC 5 up into this area. Maybe wick out a little bit higher, but then pull back and then get the breakout is what I think is likely to happen here. Nope, not weekly. What am I doing here? Should be yearly. Okay. Let's take a little bit closer look at this and see what we've got going. Yeah, I mean, 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. Get a pullback here. We do have support right in this area. And then, like I said, move on up here toward this green structure here, which again at this point should be blue supply structure now. Right there below that yearly pivot. Yeah, so if I'm looking at this, actually, would that be 5? 1, 2, 3, 4. 1, 2, 3, 4, 5. Let me see here. Let me make sure wave 3 isn't the shortest. That might be the top there, just about. Some of my measure out wave 3 there. Shorter than wave 1. 3, yeah, so that couldn't be that there. So, okay. So, yeah, it's going to be possibly a leading diagonal here is my initial thought. On that pullback, get a 5 up here toward this. Oh, man, what did I get in my eye? Sorry, guys. Give me just a minute. Oh, what's going on there? And it could pull back even further in here. But yeah, looking at this as we'll just get kind of a throw over here, finish that up before we pull back. You can see these spikes of volume we got here on these two candles. Today's volume is greater than yesterday's volume, and you can see that the candle spread is much smaller than the previous one. So, more effort, much less result. So again, we could pull on back here even toward this next kind of support resistance level here. Man, it's killing me. Whatever's happened to my eye here. Something like about right here. What is that? Potentially around 89.50 or so. If we lose this 10.904 area. But then we'd look for one more push up again up here toward that 16.450 type area there on that. So we're looking at there. Let's see here. Yeah, that's. I mean, these are the strong support resistance levels here coming up. So that's why we would look at them. Let me see here. Oh, let me see. What's the next one here? Scrolling through you guys here. Hopefully y'all are doing all right. It's a good Friday. It's a nice day outside over here, I know. Finally. Been raining kind of crazy earlier this week. Let me see. Mark, talking about Ethereum, said it makes you sad because you were going to add to the Ethereum bag, but then didn't. Such a poor move. That's what we always say, though, right? Or it's like, oh, we're going to, until it gets to that point. And then we don't, right? Because our emotions are trumping everything else. No pun intended with Trump. But seriously, right? I mean, this is a legit issue. This is a big thing for traders. Is that idea that because you hear it all the time. You hear people on all the time. Oh yeah, well, if it pulls back to this level, I'm definitely going to get in, right? And then they don't, because it's easy to talk about when it's not there, but when it gets there, then you're in the moment, and it seems like it's never going to stop falling, right? Yeah, it's what we all have to deal with, and it's a legit issue. But you have to understand that it's going to happen, so you can start deciding before the trade ever happens, how are you going to deal with that? The more that you can plan out and write it down on paper, and steps involved and rules required, all these things, the less likely you are to be emotional in your decision making when the time comes. Did y'all hear what I said about that? Whoops. It's going to be turbo. So, take it for what it's worth there. And see, the problem with a lot of traders is that, again, they think they just come in and just toss money into the market and make money on it. They don't realize that it takes preparation. It takes systems. It takes, rules. It takes strategies. And for most people, they don't want to learn all that. They just want to be told when to buy, when to sell. And that way they don't take any responsibility in it. Well, if they win, it's all because of them, right? But if they lose, then it's the other person's fault, right? I mean, human beings are really kind of tricky that way that we work. Sucks. It makes life difficult, guys. Come on, there we go. Let's see here. Turbo US. What the heck just happened? God dog it. Ah, man, this TradingView app goes a little crazy sometimes. Ask the people in our at TWC. There was the live trading yesterday. In the middle of the session, it logged me out of my my account because I was trading through TradingView. And it's like, oh, you can't have more than one open at a time. I'm like, wait, I only have one open. Completely closed me out. I don't know what the heck happened. But anyway, it is what it is, right? I guess we'll look here at Big Get, I guess. I mean, this clearly looks like a wave 3. You got large candle spreads following up right on each other, not even pulling back. You've got expansion of volume through that. So, yeah, if I'm to look here, my initial thought is 1, 2, 1, 2, 3, 4, 5. So maybe 3, 4. Let me see here. Where's the swing high? 59.75, 59.69. So that's higher there. Okay, let me zoom in a little bit. Let me get in this other account I'm looking at, interior. Let's see. So it'd be like a 3. But that's just an ABC. So this is probably a leading diagonal here. I'm not leading diagonal, but a running flat. So now we go 1, 2, 3, 4, 5. So this may be wave 3 ending here. Let me see what that pullback is on that. And we'd probably be looking for, we'd look to sweep this kind of wave for the lesser degree here, maybe at around 39.09. So if we can get this rejection here, let's say, probably look for a breakdown below that red support. Because again, this is, ABC, 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 right? So this looks pretty much like a leading or an ending diagonal here. Right here with here. So I think that gives us wave 5 of 3. So I'm looking for a pullback down here toward 39.09. Secondary target is the 50% at 33.26. Okay. Either way will get us into this 12-hour fair value gap here. And so if we can get that pullback to the 38.2, that would get us a pattern target. of 91.18 or so. If we pull down to the 50%, give us a little bit higher up here at about 0.10073 as the target on that. But yeah, looking for a breakdown below this ascending red support here. Looks like an any diagonal for wave 5 of 3. Then we'll get that pullback. And let me see here. Can I check dot? Yeah, I can check dot. Don't. Gotta think what I'm doing here. Let's make a copy. By the way, you guys can join us at texaswestcapital.com. We'd love to have you there. Get a hell of an education. Deeper and better than anybody else out there. I'm telling you guys right now. We teach you how and why markets move the way they do to introduce you into systems trading. And so that's what we do, engineering of the trade strategies. That's what we do. Let me see, what are we looking at? Dot. So if you're tired of just saying, the next person's, all you got to do is do this, and that's, this trading strategy, and that's it. And you're wondering why it doesn't work, come join us. I'll show you why it doesn't work. I'd love to have you there. It's a lot of fun. A few of the guys are here in the audience right now. And they can tell you how they feel. They don't get paid anything to do that. They're just nice people. Let me see here. This is a pretty nice breakout here. I like this. Again, remember what I was talking about last time about the large candle spread, spike of volume on the breakout through resistance? We got that right here. So this looks like a 1 and a 2 here. Or is that a 1, 2? Oh, well, I'll tell you what, locally right here, this is 1, 2, looks like 3. What we've been talking about, we'll get a 4 and we'll get a pullback and a move up for 5. Locally right here. Oh, I like the bounce here off the monthly pivot. That's beautiful. We like to see that. This very well could be 1, 2, 3, 4, 5, 2, and this become a 1, 2 right here. And again, locally here, we're doing 1, 2, working on 3 here. So if we've got this, wave 3 is up here, a little bit higher up at $5.03 or so. I like the wave 4 pullback to the other. So we hit the R2 pivot for wave 3, pull back the R1 pivot for wave 4. We get that R5 there at, well, not R5, but the wave 5 there at $5.36. And that gets us just a little bit of overextension for wave 3 here. So I like that. Yeah, so it looks like right now we might be at or near the point where we're going to pull back a little bit before we head up higher. 1, 2, 3 has a target, minimum expected target around $5.03. That should give us a minimum expected wave 3 target, larger degree there at $5.36 there for DOT. But ultimately, it looks like the bottom is likely in here. Let's kind of zoom out here again. And look at that big move off that top there. lot of sideways here, but we swept this support level here. This is the important thing. You see how many times we've touched here, you know, since 2020, we did it here and here, did it here, basically did it here, and did it here again. We swept it, right? And here we are kind of popping back out of it after that sweep. So I think that's a pretty good sign there to rally up here a bit. So that's what I'd be looking at for DOT. Let me see here. V-chain. Please is always a nice word. I'm just saying, guys, I grew up different time period, right? We say please, thank you, ma'am, sir, all the time. I know a lot of young people today don't say that. They don't do that. But you should. You want to stand out? Do it. Seriously. Oops, I don't want to close that, but well, yeah, I do because I was making a copy here. Oh, VET USDT. Zoom out to the weekly here first, see what we're looking at. Okay, so this looks like a leading diagonal. This looks like 1, 2, 3, 4, 5. Right here. Pull back. Okay. Looks like A, B, 1, 2, 3, 4, 1, 2, 3, 4, 5, C. That means we need a breakout above wave B up here to add confirmation to this count, this macro count. 05789. And that should have us looking higher then. Wave 3 minimum expected target up here at 32.5 cents. That's what the charts are saying. And then 5 up here at 64 cents. That's what we got here, guys. But for this count, we need to break out above 05789 to add confidence to that. But there we are. And that's VET, V-chain. Fibbo says it's easy to blame the whales in Wall Street, but remember the real reason you lose is the captain at the helm, and that's you. Exactly. Let me see here. RGTI. Let's see what we got here. There we go. And look at that sideways here, all this little bit, and then boom, and then move up. I mean, if I'm looking at this right now, my first thought without counting anything, so where I would start with is 1, 2, 3, maybe a triangle here is a 4, get a 5. Now we go back in and count, right? 1, 2, just about hit the 1618. I'm good with that. Again, possibly have a triangle going on here. A, B, C, D, and we'll get an E on a little bit of pullback before we get the major, breakout of the yearly pivot there. Based on the height of this, give us a pattern target of 47.89 or so. So what do we need for this to happen? We're looking for a pullback now that stays above wave C, which is $6.86. If we're breaking down below that, that suggests that the triangle probably isn't going to happen. Breaking down below wave A definitely makes it not happen. Wave A is over here at 595. But if we can get this pullback and then break out above wave D here at 1092, that'll signal that the low is probably in. Breaking out above wave B at 1620 is going to add confidence to your account. Again, pattern target based on the height here is 47.89. Now, it's possible wave D could still be in progress. Move up here a bit, and then you'd have a wave E come down. But if we're going up from here and we're just breaking out above wave B here without getting that pullback for wave E, we'll probably look at this as a 1 and a 2 rather than triangle here. And if we get that instead, pretty close to the same target, $50 target versus, a $48 target. So yeah, so I think we got a triangle potentially going on here. Want to see a little bit pullback if we do. Got to stay above wave C. You notice it's happening right here on top of that low volume node. So we like to see that. That's good. Resistance right there at the yearly pivot. Look for that to head up. Let me see here. Roy, what's up? Says, I use the same mentality as I did crab fishing. It's my fault if I don't find the crab. There you go. Let me see here. XMR. XMR, MR ducks, MR not, OSMR, CM wangs, LLB, MR ducks. Y'all ever heard that before? Basically, it's whoops, get over here. MR ducks, MR not, OSMR, CM wangs, LIB, MR ducks. That's all you got to do. Have fun with your friends, guys. Give that to them. Tell them to read it. And they'll be like, Mr. Ducks, Mr. Not, Osmer. You're welcome. Life's good. Life's good. So we got this pullback here into this structure here. I guess we'll pull it right there. Screen demand structure. We hit the EQ here. Popped up, pulled back. Okay, so I like that. So it looks like 1, 2, 3, 4, 5, and then A, B, C here are WXY. So that's nice. What else we got here? Or actually, it may be WXY. So just a three-wave move there. Yeah, okay. I think This may be something like this. We may be done or nearly so on this. This looks like it may be leading diagonal here. And so the idea would be a WXY or ABC right here. Then 1, 2, 3, A, B, C, D, E triangles 4. Oh, ABC and then triangle and then ABC here. So yeah. Just I'm trying to show you guys what I'm looking at here. See A, B, C, D, E. Yeah, and then ABC here. Yeah. Like that. And then quite potentially A, B, C up here. Finishing off that throw over. That's the weekly. What does that daily look like? Yeah, if I'm looking at XMR, it's looking to me like this was the top here. Oops. See here. So where would we pull back? I'd be looking here, right there above that low volume node around $195. So if we can get some further breakdown here, I'd be looking like around $195 as a likely target. Now, like I said, it could still potentially be pushing up a bit higher. It's just there's with this nonsense here, there's really no way to tell for sure. But we do have 5 waves up near the previous swing high here from back here in May of 21. This was a good accumulation range here. Sage, you're selling climax, automatic rally, secondary test. You bump up there in phase B, second bump up into phase B, sharp drop back down. Not enough to give you a spring, just gave you a last point of support. Rallied up, show strength, pull back, last point of support. And you'll notice the difference in volume on them pullbacks. So we had a lower or a higher low here from, I don't have the volume on here. Yeah, let me see, where is it at? Where is the volume? Pump up the volume, pump up the volume, pump up the volume. This. Anyway. There it is. Jeez, oh whiz. So yeah, so right here at that low, volume was 1.18 million. And then on the pullback, it was only 284.77 million. So basically, you know, less than 25% of the volume here on a higher pullback. I mean, if you're seeing that, you should be long. But it looks like it may be done or nearly so. If we continue pushing up into here, I would look for a rejection around the EQ, which is right here. Usually it's the first area you look for a rejection in a wick. Right around $300, $301. And as you can see, that's that support resistance area right there. So it's a good target area to do that. But yeah, again, looking at that pullback, probably around here, 195 would be my target for maybe pushing out higher. Let me see here. FET, not fentanyl, right? I know you didn't mean fentanyl. Stuff's crazy, man. Tearing up everything. Okay, where are we at here? So FET, USDT. I don't even know why I pulled it on Binance. Okay, that's fine. I mean, this looks to me like 3 waves down. So, I mean, big picture, we need to break out above this swing high here at $2.19.5. How many of y'all are subscribed to the Market Breakdown, man? The daily. It's not even a weekly newsletter anymore. It's a daily now. It's got the forked feed commentary in there. How many of y'all are signed up for that? If not, you should be. If not, you should be following the forked feed there on Twitter, X as well. Give you commentary throughout the day, commenting on people's stuff as well. It's really good stuff. It's a lot of fun too. It's not just dry financial stuff. So we have this. I'm not saying this is a triangle here. I'm saying there's the support, and then this is the resistance that it broke out through here is what I'm saying. Well, based on the height of this pullback here, if we get that breakout above 21.95, we'd have a pattern target of $2.19.5. Gives us a pattern target up here of $14. And like I said, it doesn't actually have to go to that, but you know, often it does get to that pattern target. This looks like it's just a leading diagonal or a diagonal here. It's like a 1, 2, 3, 4. That would get us a 5 up there to finish out that. What's the daily look like? All right, I've got 2 ideas here. If this is a 1, 2 here, then we have 5 waves up from there at $2.08 or so, which would then give us our 1, 2, 3, and it's almost at the 3618 extension, so really overextended wave 3. I mean, that's 5 waves up there. Wave 3 is bigger than wave 1, so that's a 1 and a 2. Yeah, so I would look, well, locally here, again, like the other ones, looks like we're on a wave 4 here. Looks like 1, 2, 3, 4, we'll get a 5. So further pullback should have an initial target of 0.787, secondary target of 0.76. And that'll give us a pattern target of at least 0.946 to finish 1, 2, 3, 4, 5 waves up. And then we'd have to look back down here around that 0.76, 0.78 area for the pullback after before we'd look for it to rally higher again. That's FET. Let me see here. Honey, I'm trying to get through these guys. I'm doing my best. Honey, honey, honey. NT, I appreciate you. TWC is the best. Check it out, guys. I believe it is as well, right? I already did that. Well, you might have said that before I did it there. Mr. Smith, you said have trouble with TradingView real-time pricing after hours for metals. Are you making a statement or asking? It looks like a question, but I'm not following what you're asking there. Let me see. What were we looking at here? Honey, right? I saw somebody looking for track, TRAC. Man, we've been watching that and trading that there in the market updates at the end of the day that I give to our students there at the Trading Academy. See, 3041, 3044, that's the high there. That's just ugly overall. Let me see. I'll be honest, I'm not liking what I'm seeing on Honey. Is there a better chart? Oh, it just looks even worse. But it does give a bit more context here. Well, you can see we're at the bottom of this low volume node at these all-time low areas here. I'm going to assume if the low is in, this has got to be 1, 2, 3, 4, 5 here. And then maybe 3 waves down here. Oh, man, this is ugly. I'm going to be honest. This is really ugly. Even look on the weekly here. Stochastic RSI is up, up almost in the 4th quadrant here in the bullish side of neutral. And we're not really going anywhere. We hit here. There was more volume on this move, on this little candle right here, which kept it afloat, and then it dropped down. So not enough, demand there to hold up. Dropped down. We got demand here, but it got slapped back down by supply from up in this area. There is nothing. Okay, yeah. So there's really nothing pretty about this chart at all. Even here on the local, damn. Just trying to find something I can give you here. I'm going to be honest, right now it's just 3 up, 3 up. So right now this is an ABC. This is corrective unless we can get a breakout higher. Yeah, so right now this is ABC, W, X, ABC, X. ABC is a Y here. So unless we can get a breakout above 0.02826, that's corrective. And then, I'd look to go lower. If you can get a breakdown below wave X here at 0.02567, pattern target based on the height of that is 0.02265, right around the S1 pivot here on the weekly. If you can get a breakout higher, then, potentially ABC is 1, 2, ABC is 3, 4, maybe ABC is 5. And that could be the start of a movement up. Let me see here. But you're going to have to, no, see, you can't do that. Because if you're breaking out basically above this 0.02827, then this will be larger than this. And this is already larger than this. So this is, if this is 1, 2, 3, 4, 5, well, wave 3 will be the shortest of 1, 3, and 5, and you can't have that. So I don't know, possible. If we can get one more slider higher high out here, I'll give you this. I'll say 1, 2, 3, 4, and then 1, 2, 3, 4, 5. That would be your saving grace for the bottom being in here. Would be this idea that we're doing a a leading diagonal. We should get rejected right around the swing high here. Then we'll look for a pullback, probably down toward this 0.026 area. So you can get us maybe like 1 as a leading diagonal, a 2 on the pullback, and then break out higher. But, you know, that has to happen. Right now, the default look at this should be that this is 3 waves up. 3 waves up gives us a WXY. That should be your default wave. If we break out higher, we're going to have to assume 1, 2, 3, 4, and then 1, 2, 3, 4, 5 up here. Hopefully that makes sense. Let me see here. I got to catch up to you guys here. Oh, man, oh, man. So, yeah, it looks like we're just about out of time here, guys. I'm going to do one more here. Let me see here. We'll pull up track. I think that was the next one. Go over here. Where is track? There we go. All right, track's still looking good. Looks like we've got a 1, 2, 3, 4, working on a 5 here, probably just about done. Based on the height of this pullback, we could potentially see it get up here around 0.50, so about 50 cents. If we can get rejected at that 50 cents, or even rejected where we're at now, look for a pullback down here toward 38.5 cents or so would be my expected pullback area. And then let's just say we make it up to that pattern target and the pullback to the 50%. If we can get that. Turn off these red color here. That could have some minimum expected wave 3 target up there at around 89.5 cents. So yeah, if we can get this up just a bit higher there, then pull back, and we'll look for that move up there on that. So that's what I'm looking at for track there anyway. Looks like we had a spring down here, rallying up into resistance, pull back, and then pulse a breakout. That's what it looks like there. Hopefully it helps you out. Let me see here. I appreciate you guys joining in as always. I tried. I tried to get as many charts as possible. So, yeah. But, again, a lot of y'all coming in here, especially later there. Yeah, if you're requesting a chart, guys, and there's a specific exchange you're looking at, let me know. There's only so many charts. I've got a lot of them in my head because I look at them all day, every day, but there's so many more that I've never heard of or that I don't even look at. And if you know where there's a better chart, definitely let me know on it. Let me see here. So that's what I've got here, guys. I'm over my hour and a half, so I'm going to get out of here. We'd love to have you join us, TexasWestCapital.com. But even if you don't, get into the daily newsletter at themarketbreakdown.com. By the way, I also, a few weeks back, started my socioeconomic theory, applied socioeconomic theory newsletter for you guys. That's basically the underpinning concept of how I look at markets and how I understand them. So if you're really interested in that, right now it's still free. It goes out once a week on Friday. So the third issue is going to go out tonight or today here in a bit. Yeah, a little bit later, a few hours. But anyway, we go in, I kind of go into there and explain different concepts and how they apply to markets and what's going on through the lens of socioeconomic theory. We apply it. The idea is to get you off this belief that news is what drives markets. News does not. News is a knee-jerk reaction. So your CPI print, your jobs numbers, those are all just temporary knee-jerk reactions, guys. The trend's already established. And once you understand how the trend is already established, it makes it a lot easier, at least in the macro way, to stay in the right direction of the trend. Now, you're still going to get probably caught up in your emotions and whatnot when you get down to lower time frames, dailies and lowers, when you have news events, because you're going to get a lot of times really impulsive reactions to it. But again, at the end of the day, news events, whether it's government news or numbers coming out or whatever, it's all just reactionary, temporary knee-jerk reactions within the overall trend. So anyway, love to have you subscribe to that as well. If you sign up for the market breakdown, it should be suggested there as well, and you can jump on that. But I tell you, all the heavy lifting's done at TWC, guys. Still $97 a month. It meant for it to go up to $128, but the website is not ready yet. I'm waiting for it to get done. So until it's done, you can still get in at $97 a month and get absolutely all the education that you can possibly need to really understand how and why markets move the way they do, and how to use that to develop your own, to engineer your own trading systems. Plus, you trade live with me Mondays, Tuesdays, and Thursdays early in the morning. You'll get access to Fibbo and Fibbo's threshold theory. You'll get access to his trades as he's trading them. You get access to Vince's trades and Andrew's trades as well. And of course, like I said, every night I do the market wrap, and usually it's about 20 to 25 charts that I go over stocks, futures, and crypto. So just absolutely tons of way for you to win there if you're serious about trading and want to learn how do you stay in the market, like really. All right, guys. Y'all have a great weekend. Trade safe out there. As always, remember, the only thing you control is how much you lose, okay? So please keep working on that risk management. As mentioned in the chat there, happy Mother's Day. Tell mom you love them. All right, guys, it's Sunday. Make sure you do it. Don't forget. Thanks a lot, guys. Hey, come back on Wednesday for Beards and Bitcoin with myself, Andrew, and Tillman from Arch Public. That's a lot of fun, all right? All right, y'all take care.